Good morning, Mr. Commissioner.
Yes.
Members of the Commission, my apology for starting late and also an apology on behalf of our admin team. It was just one of those things that the new machine didn't come to the party and it led to this delay, and I'm very sorry about that. I hope it's the last time.
That's fine.
We have a witness ready, and my colleague, Advocate Goe, will present the evidence.
Good morning, Commissioner, members. My apologies as well for starting late. Mr. Rohith Raja is ready to take the oath.
There's something missing.
Hello? Hello? Yeah.
Morning, Mr. Raja.
Good morning, Commissioner.
You have been here before, haven't you?
Yes, I have.
And so you don't have any objection. Nothing happened between then and now that would cause you to object to taking the oath?
No.
All right. But you swear the evidence you're about to give will be the truth, the whole truth, nothing but the truth, so help me God.
So help me God.
Thank you. You may be seated.
Thank you, Commissioner. Mr. Raja, am I correct that you have prepared a statement for the Commission?
Yes.
Am I correct that you have not been forced to make the statement? You did it on your own accord?
Yes, I have not been forced.
And are you satisfied that the statement is a true reflection of your belief as far as the S&S refineries deal is concerned, and the evidence leader has not put anything in the statement that you do not agree with?
Yes, it's totally my statement.
Okay, thank you. You can start at paragraph 1.
Good morning, Commissioner and members. My name is Rohith Raja. I'm a 52-year-old adult male. I've been employed by the Public Investment Corporation since 1 October 2009. Currently, I am the Executive Head of Impact Investing. On 16th of March 2019, I received a request by Mr. Martinez Rieda and Advocate Inkaiseng Goe from the team of the Commission of Inquiry to make the statement covering, in particular, the following issues relating to PIC's investment in and loan to S&S refineries in Mozambique. These issues are the origination of the deal, overview and nature of the deal, my role in the deal, role of India Freek and Zaid International, the payment of referral fees, in particular the basis, the calculation methodology, the conditions and the timing thereof, conditions precedent and fulfillment thereof, order of disbursement of funds, disbursement of the loan through a special purpose vehicle, proposed property transaction, possible legal action by the sponsor or any other third party, PIC's involvement in the dispute between Mr. Mirza and Mr. Rasool, and the present status of this investment. As mentioned earlier, the facts I described below fall within my personal knowledge and recollection unless otherwise stated or the context suggests otherwise. If I deal with the issue relating to the overview of the impact investing division and roles and responsibilities, I just wanted to set context, some context before I go into the deal itself.
Ms. Goe, can I just ask, there's somebody sitting next to Mr. Raja. Who is that your legal representative?
Sorry, Commissioner. This is Mr. Silo. He's from the financial department at the PIC.
Mr. Commissioner, may I proceed? Before I proceed with giving the information in respect of PIC's investment in and loan to S&S refineries, I would like to give the Commission an understanding of the composition of the impact investing division and the role and responsibilities of various team members at the time of making this investment. The staff in the division comprises the following in order of seniority. This is as at the time of the making of the investment: the senior fund principal, a fund principal, an associate principal, an investment associate, and an investment analyst. My role is the senior fund principal.
A question, yeah. Yes, I just wanted to check something. The PIC has got an unlisted division. Maybe you can refresh our minds by telling us the various types, because I know it looks like there's private equity, there's SIPs, and there's developmental, you know, the impact investments. Just give us again that clarification, and maybe within your division the amounts involved, you know, there. Yeah.
Okay. On the unlisted investments, the unlisted investments is made up of 3 different divisions. One would be the unlisted properties division. The other one would be private equity and structured investment products. And the one which I'm currently the head of is impact investing. I think formerly the name was developmental investments. So I think up until about a year ago, it was called developmental investments. It's since been renamed impact investing. So that is in terms of the unlisted investments. If we look at the amounts involved, so on the private equity side, you would find that the only mandate that the private equity has is with GEPF, and there we had an allocation of 15 billion rand. To invest both directly and through fund of funds.
1.5, yeah?
1.5, yes. On the property side, it is an open mandate, so they are not given a committed amount. It will be in terms of the strategic asset allocation contained in the client mandate. Then on the impact investing side, from GEPF, we've been given an allocation of 55 billion rand over a period of 5 years. And then in addition to that, we have mandates from the compensation fund and from the unemployment insurance fund. So that is the allocation amongst the 3 different divisions of unlisted.
Do you have a sense of how big the property side is by any chance?
I speak under correction, Commissioner, but I think the properties, I think it's about 7.5%, I think, is the total allocation to properties. Okay, I'm on paragraph 5. My role as the senior fund principal is focused on matters such as strategy, formulation, and implementation at a business unit level. PIC client management, performance management, participation in various PIC governance structures, human resource management, interdepartmental relationship management, budget management. Those are the key areas. As a senior fund principal, I was responsible for the SME, priority sector, and social infrastructure portfolio in the impact investing, or formerly developmental investment area.
Which means that this is the main part of your sort of responsibilities, in a sense that this is the actual department. This is the full department, the impact investing.
Okay, through your Commissioner, just to give some context, the divisions that I described just now was it's the present situation. At a point in time, before there was executive heads, we didn't have a distinct, we had 3 senior fund principals. So you had the senior fund principal on private equity. Then if we took the impact investing side, that was split between two fund principals. Essentially, the economic infrastructure was handled by another fund principal, and I had covered the priority sector, SME, and social infrastructure portfolio. Today, all of those portfolios are consolidated in one, of which I am the head of impact investing. Private equity continues as a standalone.
I get it, yeah, thanks.
The fund principal would be responsible for strategy formulation and implementation at fund level, guided by the senior fund principal. Also be involved in portfolio construction and management of the investment team of the fund that he manages, or she. At transaction level, the fund principal will work closely with the rest of the investment team, provide guidance, play a lead role in the transaction structure and negotiation of the principal terms of the investment with the client, and review the work of the team. The due diligence field work is primarily led and executed by the associate principal under the guidance of the fund principal, in conjunction with his or her team comprising the investment associates and investment analysts, and where necessary, contracted in third-party service providers. The associate principal also works closely with third-party service providers contracted in to assist in the assessment of specific parts of the transaction. The associate principal is a key person in ensuring the execution of the field work internally. He would liaise with assurance providers in the legal, risk, and ESG units, including discussions relating to their reports. At transaction level, my responsibilities include providing the impact investing team with guidance, reviewing investment reports compiled by them, and recommending investment reports to the relevant approval committees. If the transaction does not have prospects of meeting financial and social returns, as senior fund principal, I do not recommend them to any approval committee. It is important to note the recommendation of investments to committees made by myself as senior fund principal is only in respect of transactions within my division. So I would not recommend transactions to committees in respect of private equity or the property space. And I can add even the structured investments product space. As a fund principal position was vacant at the time of doing the SNS transaction, I oversaw the process of putting together a team with varying skills mix to assess the transaction. These included an associate principal, Mr. Paul Magula, an investment analyst, Mr. Imran Mia, the chief economist at the time, Elikana Maroge, and the executive assistant from the CEO's office, Mr. Wellington Masikesa, who was extensively involved at the time in the coordinating of the development of PIC's Africa investment strategy. This expertise was augmented by third-party contracted service providers, namely Ernst & Young, which dealt with the financial aspects, Mott MacDonald, that dealt with technical and commercial, Cliff Decker Hofmeyer, who was the local legal firm, and Sal Caldera, which was Cliff Decker's correspondent attorneys in Mozambique. So that was the team that looked at who had contributed to the assessment of the SNS refineries transaction.
Just a quick separate matter. For due diligences, do you use BE companies sometimes in terms of transactions?
Yes, in most cases we use BE service providers. Sometimes what would happen, to the extent that a transaction is very complex, that requires multidisciplinary skills and which we cannot find amongst BE service providers, what we would tend to do is allow for the, let's say if we took a big audit firm, then we'd allow for there to be a partnership where I think up to 30% of of the work must go to the BE service providers. But if we look, this has evolved over time because our procurement policy had also changed. So a lot of focus as well is paid to exempt micro enterprises and qualifying small enterprises in terms of the triple BE codes. Then if I can move through to the origination of the SNS refineries transaction. Sometime in February 2014, PIC's then Chief Investment Officer gave me an investment proposal prepared by BDO in Mozambique. It had no contact details, so I asked the CIO for the contact persons, and he provided me with the contact details of Mr. Siyabonga Nene.
Can I stop you there? Did the CIO tell you how the proposal came to his?
No, he did not mention to me, nor did I inquire.
But normally, how would proposals get into their hands? Are they emailed? What happens? How do they end up in the CIO's office?
Okay, the investment proposals that would come from many sources, which I had articulated in my first statement on the investment process, but it would come, the majority comes as unsolicited. So it just comes from the public. You'd have proposals that would come from strategic partners. So we have MOU signed with different institutions, and if we look in South Africa with the IDC and DBSA, you'd have proposals, okay, the unsolicited is a walk-in as well. And then we'd have proposals that would come from the CEO's office, from the Chief Investment Officer's office, and then you'd have proposals that would be originated from the team I referred to earlier in my statement. So, but you'd have we'll have quite a few people who'd want to meet with the senior people in the PIC, so the CEO, the Chief Investment Officer. So in this particular case, it came from the Chief Investment Officer, and it was not electronic, it was a hard copy.
Another question. What is the relationship between Mr. Siyabonga Nene and BDO?
Okay, as far as I could ascertain, there was no relationship between BDO and Mr. Siyabonga Nene at the time.
Sorry, can you just explain what BDO is as you understood it at the time? Because when you look at it, it says an investment proposal prepared by them. It doesn't mean that they were they might have prepared the investment proposal, but were not necessarily the owners of the idea. The question is, what was BDO's role at this time when you saw them? Because I thought that was, from reading the documents, that was a different function altogether.
Thank you. Through you, Commissioner, the BDO had prepared the document, the investment proposal, on behalf of SNS Refinery. It was not their idea. They were contracted in. BDO is an international audit firm. If we say it's the second tier of audit firms. So you have the big four, and then it's part of the second tier of audit firms.
Yeah, that's exactly, that's why I didn't understand your question, which said that you saw BDO as the originator, because they weren't. They prepared the document on behalf of SNS. And how did you understand Mr. Nene's role at that point in time in relation to the proposal?
Okay, thank you. When I had received the proposal from the Chief Investment Officer, and he had given me the contact details of Siyabonga Nene, so I had automatically understood that he was interested in the transaction. So, but upon having the meeting with him, when he had come in with another gentleman by the name of Mr. Amir Mirza. So in that conversation, and I must say from that point onwards until the conclusion of the transaction, Mr. Nene did not play much of a role as far as I could see in terms of my interactions. It was Mr. Mirza who always took the lead in terms of explaining anything, or if we needed any information or needed to meet with any people.
Would it be correct then to say that the essence of Mr. Nene's, given our previous testimony and what you've said here, the essence of Mr. Nene's role was to open the door?
Look, in retrospect, I would think that's probably probable that it was to open the door. I would think so. When I reflect back, at the time, I didn't see it as such, but when I look with the passage of time and the conclusion of the transaction and the fact that Mr. Nene did not play much of a role throughout the transaction, I could only understand it to be that. Though, on the other hand, at some point I felt that the relationship between Mr. Nene and Mr. Mirza seemed to be more friends rather than business partners.
Would it may be speculation, but would it be that if the proposal had come to Dr. Machila without a person who he would have responded to, that the project would have been considered by the PIC?
Look, I think that we would have considered the project because it was not often that you would get in a project where there's such substantial investment by the sponsor. So it's something that we look at when we assess projects. If somebody has invested such a significant amount of money in the project, there must be something good in the project. So we would probably have looked at it regardless. Just to complete paragraph 10, I had asked him if he was related to Mr. Nhlanhla Nene, who was PIC's chairperson and the deputy finance minister at the time, and he confirmed that it was the son of Mr. Nhlanhla Nene. Shortly thereafter, I contacted...
Are you referring to Mr. Machila?
The CIO at the time, Dr. Majila.
Yeah.
Shortly thereafter, I contacted Mr. Siyabonga Nene and arranged to meet with him. Immediately prior to the scheduled meeting, I requested Mr. Wellington Masikesa, who was the executive assistant in the office of the CIO, to join me at this meeting, which was scheduled to take place at PIC office. At the meeting, Mr. Nene introduced himself and a gentleman called Mr. Amir Mirza. Mr. Mirza indicated that he and Mr. Nene owned a company called India Freek Trade and Investment Pty Limited, which I'll refer to as India Freek going forward, and wished to jointly participate with PIC 50% in acquiring 50% of the ownership in SNS Refinery. They requested PIC to fund their portion of the transaction. The meeting concluded with PIC agreeing to visit the plant in Mozambique. I will now deal with the overview of the SNS Refinery transaction in chronological order. Before I start with how this transaction evolved from the time we received the application for finance, I would like to highlight that at no stage was Mr. Mirza, nor Mr. Nene, nor India Freek, whether directly or indirectly, ever shareholders in the SNS Refinery transaction. At conclusion of the transaction, the only shareholders were PIC and the sponsors, who I'll refer to as the Rasool family. PIC did not advance any funds to the above mentioned for the purposes of owning a share in the company. Following the
a question. I just need to go back to understand something quickly there. When the CIO was taking, was telling you about this transaction, did the CEO then, I think it probably was Mr. Masilela, did he participate in investment decisions?
Through your chair, yes, Mr. Masilela was the CEO at the time. Mr. Masilela was represented on the different committees. So it was Portfolio Management Committee, he was represented on the Fund Investment Panel, he'd be Board Investment Committee. He was represented at all these committees. So in essence, I would say wherever the CIO was present in a committee, the CEO was also a member or a standing invitee to that committee.
And yeah, just another question then, yeah. In these types of transactions, would you typically include Mr. Masekesa in this type of a transaction?
At the time, it was in my portfolio. It was the first transaction being done on the continent. Hence, I'd drawn in Mr. Masekesa, even Mr. Elikana Moroge. Normally, I would not bring him into the transaction. But in my engagements with Mr. Moroge, I found he had extensive knowledge on the continent, and therefore I had brought him to be part of the team. Can I proceed, Mr. Then if I move to paragraph 17, following the resolution as outlined in paragraph 16, oh sorry, it should be the proposal. As outlined in paragraph 16, during February 2014 or early March 2014, Mr. Masekesa, Mr. Magula, and I visited the plant in Nakala for preliminary discussions with the sponsors and a site visit. Thereafter, the associate principal compiled a scoping report which he tabled at PMC Unlisted Investments on 18th March 2014. The committee approved for the deal to be subjected to due diligence. An indicative or rough cut financial structure was scoped whereby PIC and India Freek would own 25% each equity for approximately 29 million, with PIC looking at funding India Freek's portion. At this stage, and remember at scoping stage, without verification of the numbers, the capital cost of the project was $100 million plus an estimated working capital of $5 million. The initial structure was based on equity funding totaling $60 million and senior bank loans of $40 million. The key issue, when we had tabled the proposal at the PMC, and I'll call it PMC 1, being the first time we went to the PMC, the key issue raised by PMC 1 related to Mr. Nene's participation in the transaction, given that his father was the chairperson of the board of PIC at the time and was also the Deputy Minister of Finance. At that point in time, PIC did not have a policy that dealt with the provision of finance to interrelated parties. The PMC requested the deal and legal team to investigate the legal framework on financial assistance to interrelated parties and report back to the committee. And should Mr. Nene's involvement jeopardize the success of the transaction, he should not be involved in the transaction. The team reported back to a subsequent PMC meeting that there was nothing preventing PIC from funding an interrelated party. I wish to point out that a politically exposed person's policy was not in existence at the time of approving the initial transaction. The policy was approved later in the year, in December 2014. Following completion of the due diligence...
Just on that, I mean, just to get a point of clarity, while there may be nothing preventing because you didn't have a policy, were you comfortable with proceeding? There's a difference between policy not preventing and feeling comfortable with proceeding given the close relationships that you were aware of.
Look, I think we were comfortable at the time given that we did not have any pressure on us. And we thought as long as we deal with this project where there's full disclosure and there is no interference in the investment process, that we could proceed. But as you would find out later, Mr. Nene had dropped out of the transaction very early on.
Just to follow up on that one. Prior to this S&S Refineries transaction, were there other transactions where there were politically exposed persons that you went ahead and invested in?
Through you, Commissioner, yes, there have been transactions with politically exposed persons that we went ahead with transactions, and there are also transactions with politically exposed persons involved where we have not proceeded with them. Following completion of the due diligence and the negotiation...
Just before you do, just perhaps to the legal team, can we get a list of the transactions that have involved PEPs prior to the policy, and whether, once the policy has been adopted, there have been transactions involving PEPs?
We'll do that, Commissioner. Thank you.
Following completion of the due diligence and negotiation of the capital structure of S&S Refinery, the investment team presented its appraisal report to the PMC, to PMC2 on 7th August 2014. The PMC recommended the transaction for approval to the fund investment panel would set on the 11th of August 2014. At this stage, the project cost, including working capital, had increased from $105 million to $115.1 million. The increase in the project cost was mainly attributable to capitalized interest costs during the construction period of $7.8 million and the inclusion of certain movable items of approximately $1.5 million. The shareholding was split PIC 33% and the Rasul Mirza SPV 67%. It was my understanding, after I sought clarity from Mr. Mirza, that Mr. Rasul was agreeable to vendor financing him, but not Mr. Nene. This was confirmed by Mr. Rasul. At this point,
Were
it was...
any reasons given for that?
The reason given was that Mr. Rasul had always engaged with Mr. Mirza. He had no engagements with Mr. Nene, and he felt comfortable in working together with Mr. Mirza. So hence he was agreeable to vendor financing him on the transaction, but not Mr. Mirza.
Just want to find out, you just said that Mr. Rasul was used to dealing with Mr. Mirza. Under what circumstances? Was he using the India Freek company, or how?
Look, what our understanding is that, well, India Freek had the involvement of Mr. Nene in there, so that would not be the vehicle that would have been used to ultimately conclude the transaction.
Sorry, if I understand you correctly, you're saying that India Freek would not then be the one getting shares in S&S Refineries if he was financed by Mr. Rasul?
Look, at that point in time, if I can say, is that the idea was that that in substance it had to be Mr. Mirza. So if India Freek was eventually going to be used as a vehicle, then all the necessary company secretarial work would have had to be attended to in order to remove Mr. Nene from there. But eventually the transaction didn't happen, but when we proceeded, it was always on the basis that Mr. Mirza would be the shareholder, and he'll be in the consortium of the Rasul group, coming in through one vehicle. That was the intention.
A question. In terms of the project cost and the project progression, around that time, where was that project? I mean, and how much had been spent so far, and in which form? Was it debt funded or equity funded? Just give us some color there.
Through you, Commissioner, I can't remember the exact figures, but it wasn't far off from the $105 million. But in terms of the funding of it, we had known it to be funded by Mr. Rasool and a group of Mozambican banks. At the time when we had thought that the Mozambican banks were part of the lender to SNS refinery. Subsequently, we found out that it was partly to the refinery and partly a loan directly through Mr. Rasool, who had put in the money into the company. So it would have been a mix of shareholder loan and bank funding. But I'll explain later that eventually we managed to convince the bank that all the monies must be in the company and not private loans.
Yes, and how far was the project by then, you know, by the time the PMC approved the funding? How far was it, like 50% done?
In terms of the
60% done, or what?
No, I think that the completion of it was about 90% at the time. It was about 90% when we had visited it at the first time. Okay. So paragraph 23. At this point, it was our understanding as a PIC team that Mr. Nene was no longer part of the transaction. Also, our legal due diligence established that some of the loans from Mozambican banks of $24.5 million were actually lent to Mr. Rasool and not, that should have read, Mr. of India, Freek, should have read SNS refinery. Through those security was taken over the company assets. This, together with the revision of the updated project cost, affected the capital structure. PIC exposure was then 62.5 million, comprising equity of 18.5 million and senior debt of 44 million. At its meeting on the 11th of August, the fund investment panel approved the senior loan of $44 million and 18.5 million equity funding, equating to 33% shareholding in SNS refinery by PIC. Ideally, PIC would have wanted all the Mozambican banks' exposure to be in SNS refinery rather than partially to Mr. Rasool and partially to the company. We had engaged in discussions with the banks and eventually we convinced them that it would be in the best interest of all parties if all the debts resided in the company, and this would streamline security sharing arrangements through a common terms agreement. At the time, we negotiated to increase PIC's shareholding from 33% to 45%, and this was achieved as a result of Mr. Mirza withdrawing from the transaction.
Was there any financial implications or costs to the PIC in Mr. Mirza withdrawing?
Through you, Commissioner, no, there were no costs as a result of Mr. Mirza withdrawing, but I must say that at some point I had a conversation with him and he said that he would look at selling his share. I told him, but it wouldn't make any, it would still amount to zero because you are selling a share against which you would have had full borrowings. So the net effect of it is zero. So there was no proceeds that he could expect.
So just for my understanding is that at this point in time, then the two people who originally brought the deal to their PIC were no longer involved?
Yes, they were no longer involved in the shareholding. But as I'll point out later, there was a financial consideration to Mr. Mirza. So as a result of mainly the bank exposure coming on balance sheet, PIC exposure decreased from $62 million to $53 million. These changes necessarily impacted on the capital structure and shareholding in SNS refinery. This revised structure was approved by the Fund Investment Panel on 23rd October 2014. The approved amount was $53 million, comprised $18 million in equity funding to fund the 45% of the issued share capital of the company and a term loan facility of $35 million. Thereafter, the legal agreements were concluded on the 14th of November 2014. After fulfillment of the conditions precedent or waivers or deferral of certain conditions, the equity of $18 million was disbursed. Loan funding of $5 million and $30 million was disbursed on 28 May 2015 and 17 July 2015 respectively.
Can I stop you there? The waivers, are they attached to your statement or not?
The waivers are not attached, but I can provide them. Just to clarify, on the $18 million, there were no waivers. So all conditions on the $18 million was fulfilled. With regards to the $5 million, there were deferral of some conditions. The commission.
Can I just to follow up there? If you can explain how the money was used, by the company, the equity check of the $18 million and the funding facilities, were they put in to replace shareholders, whatever? Can you just explain how the money that the PIC used, expended was used by the company?
Through you, Commissioner, all the monies were put into the company, but then there were monies from the company paid out to Mr. Rasool. It is just my understanding in terms of Mozambican law, there could not be a direct payment. So it had to come via the company. So if we look at PIC's investment, except for the $5 million, which went in as a working capital, we had bought out 45% of the shareholding of Mr. Rasool and shareholder claims at the time.
Sorry, I just want to find out, did PIC pay all the amounts into SNS Refinery's bank account, or were there monies that were paid into Mr. Rasool's personal bank account?
Yes, the effect of it is that ultimately, except for $5 million would have went into Mr. Rasool's bank account, but it went via the company. Because as I understand, in terms of Mozambican law, it had to go into the company and then out. But the effect of it is, except for $5 million, $48 million would have been paid to Mr. Rasool.
Yeah, okay, so Mr. Rasool got, for the 45%, you paid him $18 million, isn't it?
Yes,
for the stake, and then he had some loans within the business. So how much was he paid to repay those loans?
Through you, Commissioner, I can come back with that information through the.
So in total, you said he got something like $48 million. Is that out of the company?
Okay, it would have been $48 million. Ultimately.
Yeah, meaning is the 18 million to buy the 45% shares,
yes,
and then probably then another 30 million to repay loans. Is that?
Yes, it would have been a shareholder loan.
Shareholder loans.
Yes.
Okay, so he got back $48 million.
Yes, and then to add, and bear in mind, later on there was a transaction for an additional $10 million for the purchase of 25% shares.
For the 25%, okay,
yes,
which took your stake then to what, to
70%.
70%. So he got roughly about $60 million out, like
yes,
the $58 million.
Yes.
Okay. All right.
And if we move to paragraph 29, the commissioning of the plant happened in the last quarter of 2015. This was followed by test marketing of the product, with procurement of just under 3,000 tons of crude palm oil, which produced over 2 million liters of palm oil and over 30,000 kilograms of laundry soap. Subsequently, in order to increase the volumes, PIC facilitated a $10 million facility for SNS Refinery from EcoBank, secured by assets at EcoBank Nigeria. The details relating to this facility are contained in Annex E to this statement. On 21 January 2016, PIC Fund Investment Panel approved $10 million to acquire an additional 25% shareholding in the company. It was envisaged that a strategic equity partner will be brought in to operate the plant while also injecting working capital into the business, with PIC diluting in the process. And when I conclude, I will give more details of that strategic equity partner.
Sorry, at this point in time, 21 January 2016, when the 10 million was approved, was the refinery operational, and were we getting returns, or at that point in time was Rosuo servicing the loan?
Okay, the dry commissioning and the wet commissioning of the plant had occurred, and it had produced, as I contained in paragraph 29, there was operational, it was operating. In terms of the servicing of the loan, if I recall correctly, at that point in time, it was in the moratorium period, so the repayment would have not occurred, but I speak under correction on that one.
And were there any, do we have any production figures for that period?
The production figures are contained in paragraph 29, where we talk about 3,000 tons of crude palm oil, which produced over 2 million liters of palm oil and 30,000 kilograms of laundry soap.
Financially?
We can provide the figures to the Commission.
A question before you go to the next section. So out of the $30 million roughly, which you mentioned about the loan, you know, I'm not talking about the working capital and all that. What was this used to repay the Mozambican banks, or were they still part of the lenders within the balance sheet?
So the Mozambican bank, through you, Commissioner, the Mozambican banks, I think, was initially $15.5 million that was direct on the balance sheet of SNS Refinery, and the $24.5 million we had later got them to bring that funds into the balance sheet of SNS Refinery. So together with the combined debt package, we entered into a common terms agreement so that the covenants contained therein would mirror each other. And we had appointed Millennium BIM in Mozambique as the facility agent to manage that the debt exposure.
So meaning by your numbers, then the 15.5 million plus the 24.5, there was debt of 41 million around there?
Yeah, so the total package in the transaction would have been made up of $75 million of debt, comprised of $40 million by the Mozambican banks, $35 million by PIC, that would have made up 75. Then the balance was equity of $40 million, which was initially $22 million by Mr. Russell and $18 million by the PIC. So that's how, when the first round, when the transaction, we did the first round, that's how the capital structure would have looked at the time.
Yes. So meaning that there was still roughly $40 million by Mozambican banks?
Yes, Mozambican banks are $40 million.
Yeah, okay, all right.
Insofar as my role in the transaction, I was part of the team who visited the plant in Nacala to get an understanding of the deal and the opportunities that was available for investment by PIC. At a transaction level, my involvement was primarily in putting together the team of internal staff and external service providers, negotiation of the capital structure with the sponsors, which includes his advisor, and Mozambican banks.
At this point, what role did risk evaluation play in your decision? Because one of the things that stands out is this isn't a factory working with material that originates in Mozambique. The question is that this has to be purchased from, for instance, Indonesia, shipped to you, so you have the whole question of imports as the raw materials for the factory. Would there not have been a risk question that looks at what it would mean in terms of prices, dollar imports, all of those kinds of areas, supply chain, and your statements subsequent go to the question of ensuring supplies. But for the PIC to be investing in Africa that depends on importing raw materials rather than beneficiating raw materials, would that not have been something that the risk elements and decision-making would have considered?
Through you, Commissioner, yes, the risk unit would have worked in parallel with the investment team, but independently. That risk was highlighted in terms of the currency risk. But when we looked at, when we had the inputs from the various people who were involved in the assessment of the transaction, one of it was from the chief economist. And we had certain projections in terms of what the outlook would be in terms of the currency. But when we look at subsequent events, in Mozambique, there was a significant devaluation which was not factored in our projections, which we didn't anticipate, where the currency was more, when we had modeled the case, it was 30 meticals to the dollar. That subsequently moved to 70, and there were times at which it was in the mid-80s. So it was something that really we had not anticipated and then that became the source of a lot of the problems after that, because it became uneconomical. We were unable to import oil at that cost and pass it on to the consumer.
I understand that, and I understand the question of, or appreciate the question of modeling and what that means. But I'm asking a question pre the modeling. If your investment decision is about how do we expand the economies of, but that's my understanding of the rationale of the PIC investing in the rest of Africa in the first instance, is good returns plus developmental questions. Why would you invest in something or take a decision that is not about beneficiation in real terms, but it is about a reliance on an imported raw material into the African continent? Surely that, irrespective of the modeling that you do on the cost of, the impact of depreciations or whatever, surely that would have been a factor to either be considered at the outset, whether you invest in that or you don't, irrespective of the modeling.
Through your Commissioner, we had thought, the importing of the finished product from outside would be unaffordable for the consumers. So we thought if you import, you could import oil, you see you have the raw palm crude oil, then you have where there's value add, but it's done outside, say in Indonesia, it's called palm olein, then it means you pay more. So we thought we would bring it at the cheapest cost, and we manufacture not only the oil, but then the soap, and there were plans to have other added on products to that. That, in that way it would assist in terms of import substitution. So that was the rationale on which we built the case.
Sorry, while you're still there. Am I correct that the risk department had one of their CPs as saying that there should be a currency hedge?
Chair, that may be the case, but if we're looking at in terms of it's a short-term facility, and that was the main. If we take the cost of hedging, it would be exorbitant. Chair, if Commissioner, I can proceed.
Further question. In terms of the equity stake that the PIC bought, was there a valuation? I mean, you know, I don't think we have seen the valuation report on that company. Was it done and
Yes,
dusted? Done and dusted?
Okay, through you, Chair. Yes, there was a valuation done. We had used different methods. One of them was the discounted free cash flow, which came in at 129. But we felt that for this project, which was more or less, if we can call it a brownfields project, we should try as far as possible to work on what was the cost, but including the holding cost. So, for example, we have taken into account the interest during construction as a holding cost. However, in terms of because you also got a significant amount of property in there, so there we had worked on the basis of what we think would be market rentals in that area and applying a capitalization rate to that. But so essentially we tried to stick to what would be a cost rather than to pay on discounting future cash flows. We just use that as a test of reasonableness of the cost.
All right, so the value was based on mainly the project costs really than any future cash flows?
Mainly the project cost, though in terms of the property side we had tried to do a valuation based on rentals and a cap rate.
Yeah. And then the next question, in terms of the shareholders' loans that Mr. Rasool had, were they market value and did they pay the interest like the other banking loans?
The shareholder loans did not pay interest.
So the capitalized interest rate, sorry, the $7.8 million in capitalized interest costs, what was that for the banks or what?
Sorry, if I can just correct myself. Technically, the shareholder loan would have not been interest bearing, but what we did is that we looked at it on a see-through basis, because the fact that the loan was in the personal name was, I would say, just a technicality. We had to look what those funds, what were the funds used for? The funds were used in the refinery. So when we looked at the statements from the banks, we took into account the interest costs on the 40 million, regardless of whether it was in the company or on a personal balance sheet.
So meaning that Mr. Rasool did get some interest portion when his loans were bought out.
Well, he wouldn't have received the interest. We would have recorded the interest as the interest on the loan of the banks. That's what we would have done. So he wouldn't have received physical cash. It would have been a journal entry that would have come into the books. Yeah.
And his loans were just paid out as they were in the balance sheet. I mean, there was no market value type of a loan.
No, we didn't value the loan. It was at face value.
Okay, yeah, thanks.
So if we look at if I can move on to the role of India Freek and Zaid International in SNS refineries. I understand India Freek to be a company owned by Mr. Mirza, an Indian national who at the time was residing in South Africa, and Mr. Siyabonga Nene, who was described as the son of PIC chairman, Mr. Nhlanhla Nene. India Freek approached PIC to invest in SNS refinery as well as to fund their equity participation in the company. PIC did not agree to fund India Freek because when we had gone to the PMC, because the PIC BBB guidelines or policy at the time did not apply to investments outside of South Africa, and therefore we said they could look at funding from alternative sources or vendor financing. Mr. Mohammed Rasool was willing to consider vendor financing for Mr. Mirza because he had been the person he had dealt with all the time and the one he had a relationship with. At the time PIC was approached to invest in the transaction, we were unaware of the existence of a company called Zaid International. We only became aware of the existence of this company at the time nearing payment of referral fees, which I will now proceed to discuss.
Before you do, can we just stay with Zaid International? When was it established and where is its domicile?
Through you, Chair, I think it's later in my report. I think it was established on the 7th of August 2014, and the company is domiciled in Dubai.
And therefore, by the looks of that, it was set up at the time of approaching PIC for this deal, because that's when everything started. And for that purpose, would you, in hindsight, indicate, appreciate or indicate whether you think that that was the purpose of establishing that company?
Through your Chair, we had met them, I think, in February 2014. Mr. Mirza, at that point in time, the Zaid International was not established. It was established later, but I think that the purpose of its establishment would have related to the referral fees. So if I may proceed to deal with the referral fees, which is paragraph 38. During the due diligence phase, Mr. Mirza indicated that he had done a lot of work on the transaction and could even secure other opportunities like cement, clinker, and hotel projects if PIC could pay him a fee. It is worth noting that at some earlier stage, we had taken a tour of the premises for a cement and clinker plant and shown the limestone reserves and a hotel which was under construction. He asked for a fee of 2.5% of the project cost. I indicated to him that I was not even sure whether PIC would pay a fee, let alone 2.5%, but I felt that in any event, 1.5% seemed more reasonable. He tried to justify that he is losing his shareholding and value, but I indicated to him that his shareholding had no value because it was offset, or let me rather say his intended shareholding had no value because it was offset by a vendor loan liability of an equal amount. I said the best I could do was to table his proposal to the relevant committees at PIC. I understand that any fee ought to be based on the PIC investment amount and not the total project cost. However, I had already been aware of estimated costs on the clinker and cement plant, and that there was an expectation that the request would be for PIC to participate to the extent of at least half of the project cost. On a sum of parts basis, the aggregate fee would be more than the $1.725 million, and hence did not contest the calculation on project cost, as I viewed this merely as a reference point.
Sorry, can I stop you here?
Yes.
Can you just explain what you mean when you say you had already been aware of an estimated cost on the clinker and cement that was an expectation that the request would? Can you just explain what we are talking about here?
Through you, Commissioner. Yes, in the discussions, Mr. Rasool had given us rough costs of what a clinker and cement plant would cost, what the hotel would cost. So we were aware of the project cost at least from there, even though it was an estimate. And then I know in discussions with him, he had always spoke about PIC participating to the extent of 50%, and you would get funding from other parties for 50%. So if I can move to paragraph 40.
Some questions there, 2 questions. In terms of referral costs, the 1.5%, wouldn't that seem quite high in the sense that, you know, the 1% seems to cover typically would cover valuations and all the other stuff. And this one was just a referral fee as a first question. The second question is that the PIC seems to have put in about $58 million. Would the 1.5% would not be $1.7 million? If you could explain those two, please.
Through you, Commissioner, yes, in the next paragraph I concede to that, so I'll come to that. But if I can deal with the referral fee in terms of it being high, I must indicate at this point, this was the first time, at least as a senior fund principal with the portfolios I mentioned, that I had been involved in the referral fee. The first time we had done it. So, but in subsequent times, and even as late as last Wednesday, we had an IC meeting, we are re-looking at this in terms of what should be the quantum, what do we think that should be fair. And we agree that it should be a sliding scale. The bigger the transaction amount, the smaller the percentage. So that is a work in progress now, where we would have to develop a comprehensive guideline or policy on this to further refine it. But in terms of, if I move to paragraph 40, where I will explain.
Just stay on that point for a minute. It's a bit concerning. This occurred in 2014. And you're looking at a policy to evaluate what you should be doing 5 years later?
Through you, Commissioner, if I may, it has been refined over a period, so you'd find that subsequently, you'd find in most cases, costs are capitalized rather than borne for the client. Where that particular part has been changed. We pay only upon payout. That has also changed, but we felt that there should be other guidelines. So, for example, we can't be funding, and this decision had already been taken. We cannot provide a fee to somebody who we are also funding, who's benefiting in the shareholding. But last week, when we had a discussion, we felt that, look, somebody might be in the shareholding to the extent of 5%. They could still qualify, but definitely not more than 5% in the shareholding. That we would consider that. But we thought, let's deal with it more exhaustively, so to narrow it down so that there is no uncertainty in terms of payment, to get granular in terms of the rules. But on the substantive parts, we had, over a period subsequent to that, made significant changes to the way we dealt with referral fees.
Can I ask again from the evidence team that if we could get, at least in the major entities that you're looking at, whether there were referral fees or fees paid in whatever amounts in relation to the whole, and on what conditions and percentages, so we'd know what it was paid on and the amounts paid to people, whether they brought the deals or were part of a referral or whatever the circumstances was. I don't want it to be sort of unlimited, so I would look at it as a number of the key areas, taking the points that Mr. Raja has just made, to say in what circumstances would fees have been paid for 5 examples, for instance, out of various size deals and different types of deals.
We'll do that, Commissioner.
Just as a double check, this referral fee, I mean, typically wouldn't that be a rand amount, not based on a sliding scale or a percentage of a transaction, given that it's just a referral?
Through you, Commissioner, it's as far as I know, market practice is that it is based on the amount of funding. It's not a fixed fee. If I move to paragraph 40, in retrospect, I concede that perhaps payment should have been done as and when the deals have been disbursed and based on the amount of PIC's investment. This may have been one of the first referral fees paid by PI, but rather I must be specific, by my portfolio for deal referral. Since then, any fees payable on a contingent basis has been based on PIC investment amount and have been capitalized to the loan amount. In addition, at the IC meeting held last week, a week ago, on 19th March, this matter was again debated, and it was agreed that a comprehensive guideline for payment of fees be developed. At the fund investment...
Yeah, the question again then, if the fee was just based on what was done, not on other things, what would have been the amount, or can you roughly give us that?
I think it would have probably been about half of it, half that amount. At the fund investment panel, the request was presented and the committee agreed that an amount of $1,726,500 be paid to Mr. Mirza. However, this was subject to securing co-investment rights in the cement, clinker, and hotel opportunities.
Can I stop you there? Have these rights been secured, and does the PIC have a stake in a cement plant somewhere, or a clinker plant, or hotel opportunity? Or what does this mean, subject to securing co-investment rights?
Yes, the rights have been secured. However, with the cement and clinker plant, we had taken it up to PMC1, but the sponsor had later decided to put that project on hold and focus on the refinery, but those rights still exist.
Can you just explain what you meant, what was meant by securing?
It would mean that we have got the first right of refusal to participate in these projects.
Can I just pursue that a little bit? In essence, this S&S was your first venture into Africa, you had said. Is that correct?
Through your Commissioner, in terms of within my portfolio, it would have been the first. Yes, it was the first.
Would you, I mean, taking risk issues into account, would you not have thought, let's find out how Mozambique works, how the issues are, what occurs before you secure even more investments and spend money on that?
Yes, we had merely secured it as a right of first refusal. In terms of the timing, typically, even if we had engaged on this project, it probably would have taken us more than 2 years to conclude a transaction. But eventually, we had stopped and we didn't pursue the investment.
So this has been running from 2014 to now without progressing the other investments. Is that correct?
Yes, as far as I'm aware, those projects, except for the hotel, continues with its construction, but the rest have been put on hold.
When you say put on hold, you mean put on hold, it may proceed in due course?
I do think it will proceed because Mr. Rasool had already invested significant on the, at that point in time, I remember he had invested about $9 million already in the cement plant. So I think that it would proceed at some point.
Just have to follow up on paragraph 40 again in terms of the payment. Are you saying, I just want to check because we need to make findings on some of these issues. Are you saying in terms of the PIC, the team was wrong or it shouldn't have paid the full amount? What are you saying ultimately on that point?
Through your comment, what I'm saying is that perhaps it could have been better done in terms of pay the amount when the investment is concluded, the co-investment. So I'm thinking that, I'm saying in that regard, in retrospect, maybe that would have been the better way of doing it. Sure, in terms of, if I may proceed, Paragraph 42, as I say, Mr. Mirza secured.
Sorry, can I just inquire from council, what time do you intend to adjourn?
Because we started late, I was aiming at 11:45.
You may proceed.
Okay, thank you.
Chair, with paragraph 43, PIC issued a letter to Zaid confirming that PIC would pay a fee of $1.7 million on the basis of securing the co-investment rights in the hotel, cement and clinker. This was following the approval at the committee. At the time Mr. Mirza started requesting payment, he had given instructions for the amount to be paid to a company domiciled in Dubai called Zaid International. As part of the background checks, which is standard process, the PIC obtained registration documents which indicated that it was established on 7th of August 2014 and was owned by Mr. Muhammad Amir Ismail Mirza. The fee of approximately $1.725 million was subsequently paid to Zaid International on the 8th of September 2014.
May I ask you, just there, do you know when Zaid International opened its bank account?
I think we have the information on the annex, Chair. I just will provide it, but it's in the pack.
You don't have it?
The other thing is that I think I'm battling to find Annexure I. You are on paragraph 43 also. You are mentioning Annexure I, letter to Zaid International. But I says I see minutes. I'm not seeing a letter. Yeah.
I think in the packet is just before the company registration document.
Commissioner, if I may I request a tea break at this point in time so that I can follow up why the annexures aren't there?
Are not sort of in line with the statement.
Yes, my apologies for that, Commissioner.
Yes, yes,
Members.
yes.
Yes, we'll take the adjournment until 12.
Thank you, Commissioner.
Kenetseng tsa puso re fine.
But I noticed in some that and popular and okay. Right there. Right. Yeah, this is what I was saying. It's her camera put out now because she'll be very hard.
Short.
Yeah, hard. Okay.
iPad. Ah, that was it.
2 minutes. Okay, ID? 2 minutes. Yeah, can you call that, please?
How am I supposed to cross?
Okay.
Can't I do it this way? Yeah, you can.
I beg your pardon.
No, can we have that in the background?
Ubanochi, hello.
Sorry, I don't know
Makoti, the mother said hello.
Hello,
Yeah,
Sorry, it's just easier this way. There's no interference here.
Yeah, move again. Yeah, no, she is smiling.
Shahan has no questions. Does he know what he's asking me? Not Shahan. Who's it? Timbakile. Hello?
Okay.
Hi, good and you? Thanks.
150 to us. I think.
Hey?
Slightly to the side. You can turn around.
Yes, I can.
Adjournment, I'd ask Mr. Raja whether he was aware on when Zaid International opened its bank account, and he was trying to show the commission to the right document as far as that is concerned.
I'm still looking for the statement that that Mr. Raja is reading from, that you're testifying from.
Oh, this one here.
Got it?
Thank you, Commissioner.
So which document are you referring us to now?
Commissioner, it's labeled under I. I think it's the last page where there's a banking account from Emirates NBD.
And what's the date there?
The date that the bank account was opened was the 25th of August 2014.
So does this confirm your suspicion that that Zaid was actually established for the purpose of disbursement?
Look, I can't find any. I can only see that the reason for its establishment was the receipt of the fees. I can't find any other explanation for, to the best of my knowledge, for the existence of the company.
Can I just for my own edification, what is the document following the tag J? United Arab Emirates?
That's the city of the bank.
Commissioner, that would be the founding documents of the company.
Of the company?
Yes.
Okay. Yes, you may continue.
Thank you, Commissioner. Before I proceed to satisfaction of conditions precedent, I'd just like to correct on paragraph 43, where it says PIC issued a letter to Zaid International. It should have read PIC had issued a letter to Amir Mirza, and so too would be the annex. It should be letter to Mirza and minutes of approval of fees.
Not to Zaid International.
Yes, Zaid should be replaced with Amir Mirza.
Yeah, just a question. Wasn't it odd that, you had to pay the amount to a company sort of registered somewhere else, Dubai and all that?
Through you, Commissioner, Amir Mirza is an Indian national. I think he may have opened up an account for the payment of fees in Dubai, probably because of its tax-free status. That's what I could assume.
All right.
Another question. Was the contract with India Freek properly terminated in writing?
Look, with India Freek, we didn't have a contract in the first place, so I don't. So the way we saw it, there was no need to terminate a contract. We didn't have one with them.
But was it communicated to both Mr. Mirza and Mr. Nene as a partner in India Freek that their mandate was terminated and Zaid would be the one getting the referral fees?
Commissioner, we never had agreed that there would be referral fees paid to India Freek. The referral fees is to Mr. Mirza. But that's what I can say.
Is it correct that India Freek was initially going to be a co-investor with PIC?
Yes, the purpose of India Freek was for the purchase of shareholding. May I proceed, Commissioner? So if we go to paragraph 46, insofar as the discharge of conditions precedent are concerned, this is handled by the legal division in PIC. The signing of the disbursement memorandum by the legal unit confirms that all conditions have been met and fulfilled and funds can flow. That is what would happen in the particular case, as I mentioned earlier, in terms of the $18 million equity, the conditions had been fulfilled. In terms of the $5 million, there were deferral of conditions. As the executive head, or in this particular case, the senior fund principal, we place reliance on the signature of the legal unit as it relates to confirmation that all conditions precedent have been met. In respect of all the drawdowns outlined in paragraph 48 below, confirmation has been received from the legal unit that disbursements could be made. I'll now deal with the order of the disbursements. Below is the order of disbursement of funds in relation to the initial transaction and follow-on investments. The payment of the referral fee was 8 September 2014. The equity was 26 November 2014. The mezzanine or the working capital loan, 28th of May 2015. The senior loan, 17 July 2015. And the follow-on equity investment, 17th of May 2016.
Can I just ask you one question? Who was the legal head of legal at that point in time?
It would have been Mr. Ernest Nesani, who is no longer with the company.
Okay, thank you.
Chair, I'll deal with the reason for the formation of the GEPF Mozambique SPV. PIC's investment of the initial $53 million was implemented by GEPF being the shareholder of record in SNS Refinery. However, the loan was advanced through a company that was formed called GEPF Moz SPV Limited. The reason for the formation of GEPF Moz SPV Limited was a result of the following. If GEPF was going to participate directly as lender and equity in SNS refineries, the GEPF would have had a conflict of interest. For example, it would have not been allowed to participate in any possible enforcement actions against SNS refinery. As the shareholders of SNS refinery were required to provide security to the lender, in this case to GEPF, it was not going to be possible for GEPF in its capacity as shareholder in SNS refinery to provide security to itself in its capacity as lender. And the final was the other lenders were also in favor of having two separate entities representing different interests, i.e. the equity interest and the debt funder interest. If I may point out that when we had hired both our local legal firms, Cliff Decker Hofmeyer and Sal Caldera in Mozambique, that was the advice that they had provided to us. The directors that was nominated to this SPV was Dr. Daniel Majila and Ms. Matsepo More. Their appointment was in line with the PIC governance policy and approved by PIC Directors Affairs Committee.
Thanks. If you could perhaps, on how many investments would you have both was he CIO at the time? He wasn't the CEO at this time. And your CFO both serving on the board? Would it be common to have both serving on a board, an investment that's made?
Yes, it's not, through Commissioner, it's not common. Sometimes you'd have just one of them serving, especially where it's an SPV that is just for administrative purposes. But in this particular case, we had two of them. In terms of how frequently, when we, in terms of when we do investments, particularly outside the continent, and there's debt and equity, we would do it via an SPV. So I think in Mozambique, we had another investment which we had done the similar structure to.
And would both your CIO and your CFO serve on that SPV?
No. There are cases where, for example, I know on one of the SPVs, I serve as the director, so it's not necessarily the CIO and CEO.
What was the motivation for both of them on this? Do you know? Why it went to the Directors' Affairs Committee?
Commissioner, I don't know, but maybe we can go into the minutes of, or ask the company secretary to communicate the discussions at the DAC. In SPVs, to the extent that the company has a bank account, there would also be signatories to the account. I can confirm in this particular case, there was no bank account. The SPV is not an operating entity, and the only material cost incurred is audit and secretarial fees. Commissioner, I'll now move to the proposed property transaction. Just in terms of this particular, some background to it, at a point in time we had considered, because SNS refinery had a significant property asset, was basically to create what we'll call a PropCo and an OpCo dealing with the operating company. So this transaction did not fall within the impact investing division. Instead, it falls within the unlisted properties division of PIC. It was noted that at the time, the properties exposure was underweight on industrials. There was a discussion at one of the PIC committee meetings about whether it would make sense for SNS refinery properties to be spun out of the business in the form of a sale and leaseback. The idea was to partner with local Mozambican banks or outright buy these properties, with Mozambican banks exiting, but with a significant haircut. The proposal was discussed at the fund investment panel of properties, but it was felt that Vamara, the SNS refinery operator who we now have on board, should be allowed to settle in and demonstrate sustainable operating cash flows against which one could ascertain the operating company ability to meet the lease obligations. Given that the process of appointing Vamara has been a protracted one, it is still too early to establish a pattern of sustainable cash flows. This matter will be considered at a later date. Then if I may move to the PIC involvement in the dispute between Mr. Amir Mirza and Mr. Muhammad Rasul. At a point in time, the PIC's CEO, was then CEO, Dr. Daniel Majila, called me and asked me to join him in a meeting with representatives of SNS refinery at the Fire and Ice Hotel in Menlyn. When I arrived at the hotel, the following people were there: Mr. Muhammad Rasul, his wife Ms. Saidata Rasul, Mr. Abdul Sattar, a senior partner at BDO Mozambique, who had advised the sponsors on the transaction. Later, Mr. Mirza and Mr. Nene arrived, followed by Dr. Daniel Majila.
Can you just give a timeline on when this was?
Mr. Commissioner, I don't have the timeline. I can provide the date of the meeting. The purpose of the meeting was for Mr. Rasool and Mr. Mirza to amicably resolve a dispute relating to monies Mr. Rasool is alleged to have agreed to pay Mr. Mirza for work done in bringing PIC as an investor in SNS refinery. The PIC became aware of the deteriorating relationship between Mr. Mirza and Mr. Rasool to the point where it was counterproductive and distracted SNS's CEO, if I may just correct, that's part of his name, Mr. Abdul Rahim Muhammad Rasool, from successfully commencing operations. Mr. Mirza also became very disruptive as he was intent on drawing PIC into a matter which PIC was not party to. In order to have the dispute resolved amicably between the parties, the PIC in its capacity as shareholder in SNS refinery was requested by the project sponsors to facilitate a meeting between the parties. It must be noted that the non-resolution of the dispute would have had a negative impact on PIC's investment, as PIC could have been diluted as a result of a potential third party that would have become a shareholder in the project. This would also have affected the securities held by the consortium of lenders in the project, as additional securities would have been required for the project facilities extended to SNS refinery by the lenders. It is therefore PIC's view that the intervention was duly warranted to protect its investment in SNS refinery.
How does this relate to the finder's fee or the referral fee of 1.75 million US? And the date obviously matters because Mr. Nene is back on the scene and Mr. Machila is involved. So the dates really do matter. And what is the amount that the dispute was about between Mr. Rasool and Mr. Mirza, as referred to in paragraph 58?
Through your Commissioner, the amount according to Mr. Mirza that Mr. Rasool had undertaken to pay him, he said that it was $10 million. Though Mr. Rasool disputes the amount. And as far as I'm aware,
Does Mr. Rasool only dispute the amount, or does he dispute the fact that there was any agreement? And then what would Mr. Rasool's amount be that he said he agreed to pay?
Through you, Commissioner, the amount, Mr. Rasool didn't dispute that he owes an amount to Mr. Mirza. But when we had went to this Fire and Ice Hotel and I asked him what is the amount, if I remember correctly, he mentioned to me $1.8 million. That was the amount that he had mentioned that he was prepared to pay Mr. Mirza. Now, I'm not sure whether that would have been an agreed amount or whether that was what he was willing to offer and they had agreed that you will pay something, but I'm not aware of an agreement.
And was the assumption that because Mr. Nene was there with Mr. Mirza, that he would have been party to whatever or a recipient of whatever fee was eventually paid, or that he was also part of the expectation that a fee would be paid and had been promised?
I would not be able to say that, though, because as I mentioned earlier, that also I had viewed, throughout my observations, I had viewed them to be also to be friends, but I'm not saying that that's not within possibility. But as far as I'm aware, that the payment of the fees was between Mr. Rasool and Mr. Mirza.
So why would he have been there?
As I mentioned through the Commissioner, that they were friends, but when it became eventually to their settlement, then Mr. Nene subsequently concluding the actual settlement agreement, Mr. Nene was not involved. That was the last time I had ever seen him. But as I'm saying, I don't understand why he was there. Throughout the negotiations, he did not play any role, but he was there. he
Are
was
you aware
able.
of any amount that was actually settled or paid in this? Because one would assume that in the end you would need to know how this was resolved and what amount was actually paid to Mr. Mirza or whoever.
Through you, Commissioner, the amount that was agreed to be settled between the parties was $3.3 million, and a settlement agreement was concluded in that regard. However, from my understanding, I think there was partial payment of that amount, and because we kept being drawn in trying to get payment of the amounts. But so as far as I'm aware, the full amount has not been settled.
Just to clear something which I'm not sure of, Mr. Meza was paid by the PIC for the work he did.
Yes.
Yeah, and then BDO Mozambique was helping Mr. Rasul in terms of the transaction. I mean, what was the basis for Mr. Meza to be paid by Mr. Rasul?
As from my understanding, it's because it is him who had done a lot of, as well as preparatory work, but more so in terms of bringing PIC as an investor to the project. In terms of BDO, BDO's involvement was the preparation of the feasibility study, and where they became particularly involved after that was in the negotiation of the capital structure, as well as the negotiation with the Mozambican banks.
So just to follow on that, if we took the total settlement for the introduction, it would have been around $5 million.
Right.
That they would have received to just introduce you and say, hi, Mr. Machila, would you take a look at this, and then disappear?
Through you, Commissioner, that would be correct. It would be 1.7 from ourselves, 3.3 from Mr. Russell.
Yeah.
Just to follow up, so meaning that Mr. Meza got the 1.7, which was in many ways, you know, as you said, it was a double payment because he was supposed to get around half of the amount. And then he got another 3.3 million from the other party for almost the same kind of work.
Through you, Commissioner, I wouldn't say it was a double payment, the first one. It would have been a payment on the actual transaction and plus for securing the co-investment rights. But with regards to the second $3.3 million, from what I could gather in the last interaction that I had, I don't think more than half of the $3.3 million was paid.
And this $3.3 million was paid from Mr. Rasul's personal bank account. It wasn't paid by the company.
Yes, paid by Mr. Rasul in his personal capacity.
Okay.
Sorry, do you have proof of that?
I don't have proof of the actual payments, but if needs be, we can request that. Because the thing that we tried to avoid in here was to get involved. We kept on getting drawn into this thing. So we tried to stay away as well from it because it was a dispute between the two. Chair, if I can proceed to the possible legal action by the sponsor or any other third party. Following conclusion of the settlement agreement between Mr. Rasul and Mr. Mirza, Mr. Rasul, from what we understand, did not honor his obligation. From this point onwards, Mr. Amir Mirza would regularly insist on drawing PIC into this matter and asking us to ensure settlement, intimating that we were the ones who facilitated the settlement and we should ensure that it was carried through. He would demand explanations from PIC on the status of the transaction and additional funding to be made available, which should be used to pay him. I indicated that from PIC's perspective, we do not have a duty or a contractual obligation to disclose anything to him, because he or his company is neither a director nor shareholder in SNS Refinery. Thereafter, Mr. Mirza instructed a lawyer, Barry Aaron and Associates, to make payment demands from the PIC with various unsubstantiated allegations, the main one being that PIC undertook the withhold of payment of certain funds due to Mr. Rasool and PIC to pay this over to him. This is factually incorrect. There is no such agreement. In order for such an agreement, for such a situation to take place, there would need to be a cession of payment agreement. We neither had discussions regarding a cession of payment agreement, nor was one concluded. PIC lawyers have communicated to Barry Aaron and Associates that PIC is not party to the settlement agreement, and therefore there can be no demand put on us. They were advised that if they felt they had a strong case, they should have summons issued. However, since I think it's under a year, now we have not heard any and received any further communication on this matter. Can I proceed, Chair? Finally, I'll deal with the present status of the investment. Mr. Masikesa, who had come in last week and testified, have highlighted to the Commission on the current status of the refinery, which I concur with. However, I would like to point out, in addition, the following. The instructions have been given to lawyers to initiate the process for PIC to exercise its rights in terms of the pledge of shares of Mr. Rasool. Discussions will be open with between PIC and Vamara and the Mozambican banks with regards to Vamara moving from an operator to a strategic equity partner and operator in the business. And at the same time, we would relook at the capital structure to the extent that it is still relevant or make modifications thereto. Thank you, Commissioner.
Can I ask you, just for clarity, because there's been a lot of different numbers quoted at different times, can you just indicate the total dollar investment into SNS?
Okay. PIC total dollar investment would now be at $63 million. It would be made up of $28 million of equity and $35 million of the senior debt.
Senior debt.
Yeah.
And then what, and that is for an equity stake of 70%?
70%.
Right. And what is the valuation as at the end of 2017 and then the valuation at the end of 2018?
Chair, I don't have that figure, but if I can recollect, I think on equity, the valuation we have impaired. I would, given the discussions, Chair, with Vamara, I can provide the details outside of the meeting. I wouldn't want it to be on public record, if I may. Because
perhaps just refer to the KPMG report, which I think has it there, but I would like it in the record. The summary evaluations.
Yes, Commissioner, I'm asking if it's possible I don't mention the amount on record, but I agree to what's in the KPMG report. Because we are in negotiations with a party to come into the business, and I don't want them to be aware of what the valuation is in our books.
Okay, that's fair enough.
Just to check, has the loan, the $35 million been serviced?
No, it hasn't been serviced.
And the working capital loan, was that, is it being serviced too?
Look, the loans are not being serviced. Monies have been replowed, though as far as I know, the letter of credit has been serviced.
And then in terms of, you are saying that you need to exercise the pledge of shares, 66D. Just explain that. What do you mean there?
So there the they've been given that Mr. Rasool had signed certain sureties to us, and there is default. We want to exercise a pledge on those on his shares.
So meaning that you might actually take over 100% of the business?
Yes, temporarily, pending, because concurrently we'll be working with the strategic equity partner in terms of, but we expect the strategic equity partner to be in control, to take the majority of the shares.
Okay. Just to be clear on that point, I've just asked, so you extended loans to the business and he pledged shares? I mean, can you explain how he pledged shares and what will happen? Why are you trying to exercise this right, these rights on the pledged shares?
Through you, Commissioner, we had entered into a common terms agreement between the PIC and the Mozambican banks. So there is default in terms of the loan agreement. In terms of that, we are entitled to exercise the pledge, and that's what we intend to do.
I think I'm done.
Ms. Koué, is it possible to do the next witness on SNS and then we can go on to MST?
That's fine with me, Commissioner.
Yes. Commissioner, Ms. Koué. Commissioner, I have to ask for an adjournment because we have the same problem with the annexures in her statement as well. So I would really push for some time to just make sure that we get her in time before Mr. Raja starts with MST.
How long do you want? We could take an early lunch if necessary.
Please, can we take an early lunch, Commissioner?
So we would come back to the next witness on the same subject matter?
Indeed.
Yeah. And then we would come back to MST from both witnesses?
Indeed.
Let's then adjourn until 1:30, rather 12:30. No, it's already 1:30. We'll adjourn until 1:30.